I think we're going to see gold and silver move a lot higher, actually, still. I think as soon as the stock market, this little wave of the all-time highs, causing people to cover their shorts and FOMO, people who missed the whole rally saying, I got to get in now. It's like they're chasing pricing higher. Once that wave fizzles out, potentially over the next week or so, I think that's when gold and silver will actually start another leg higher. I think silver could go to about $40, $40.80. I think gold could rally to about $4,090 an ounce. So I think we're getting close to a nice move in gold, but right now it's just taking a breather. Both metals are just chopping sideways as money rotates into more exciting stuff. People love to chase stocks, so.
Silver's robust price performance in 2025 is underpinned by a convergence of fundamental factors, indicating that the current bull market is poised for sustained growth. A key driver is the ongoing supply-demand imbalance, as silver enters its fifth consecutive year of supply deficits. Industrial demand is accelerating, particularly in high-growth sectors such as renewable energy, electric vehicles, and advanced electronics, where silver's unique conductive and reflective properties are indispensable. Meanwhile, mining production is constrained by declining ore grades and lengthy project development timelines, which average nearly 2 decades. This structural supply lag limits the market's ability to respond swiftly to rising demand, establishing a firm foundation for higher silver prices in the medium to long term. Analyst Chris Vermeulen highlights the crucial connection between gold and silver in shaping the precious metals market. Historically, gold has led price movements, with silver often following and outperforming during sustained uptrends, a trend evident in the current cycle. As gold consolidates its role amid ongoing global economic uncertainties, silver has benefited from this momentum, reflected in the narrowing gold-to-silver ratio. Vermeulen notes that such ratio compression often signals silver gaining strength and tends to accelerate as bull markets mature. This interplay between technical and fundamental factors reinforces silver's dual appeal as both a monetary asset and a vital industrial commodity. Institutional interest has become a pivotal catalyst for silver's price trajectory in 2025. Chris Vermeulen observes that large investment funds, which historically underallocated to silver, are increasingly increasing exposure due to its compelling fundamentals and favorable market dynamics. Given silver's relatively modest market capitalization of approximately $30 billion, even modest inflows from institutional investors can exert significant upward pressure on prices. Vermeulen further highlights that institutional participation remains in its early stages compared to previous bull markets, indicating substantial potential for growth. Supported by technical indicators reflecting steady accumulation near key support levels around $35.50 and formation of bullish breakout patterns, silver is projected to surpass $40 per ounce in the near term, with potential upside extending to $40 to $60 by 2026, reflecting a sustained and robust bullish outlook. Now, we present the clips from Chris Vermeulen's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I think a lot of stuff's unfolded over the past 2 weeks, really. We've seen the NASDAQ break to new all-time highs, which has got a lot of people excited and bullish. It's also created a lot of people who are betting on the markets that had put in a top, they thought. It's put a lot of people on the wrong side of the markets. And then a few days later, we saw the S&P 500 break to new all-time highs. And that really is kind of the big barometer for me. Now we're really starting to see people turn very bullish, and they're piling into the stock market. We're seeing lots of shorts cover. People who are betting on falling prices have to get out of those plays because now the stock market has no overhead resistance. It's at all-time highs. And we're seeing money pile into growth stocks. We're seeing, NVIDIA's breaking to new all-time highs. The small cap stocks are on fire. So people are moving into risky, fast-moving companies because they want to make a lot of money. When money's going into growth stocks, it's usually coming out of somewhere. It has to come from somewhere to reinvest, right? And so we've been seeing gold and silver. They've been trading sideways. They're slightly lower over the past couple of weeks, really. They're taking a bit of a breather still. And I think we're going to see gold and silver move a lot higher, actually, still. I think as soon as the stock market, this little wave of the all-time highs, causing people to cover their shorts and FOMO, people who missed the whole rally saying, I got to get in now. It's like they're chasing pricing higher. Once that wave fizzles out, potentially over the next week or so, I think that's when gold and silver will actually start another leg higher. I think silver could go to about $40, $40.80. I think gold could rally to about $4,090 an ounce. So I think we're getting close to a nice move in gold, but right now it's just taking a breather. Both metals are just chopping sideways as money rotates into more exciting stuff. People love to chase stocks. So we'll take a look at the chart of gold here real quick first. If we take a look at the chart of gold, and if we just zoom back a couple of years here, more or less we've seen gold have a series of, it has a rally, and then we tend to see it consolidate sideways for a while. These are very bullish types of price patterns. A lot of people get nervous that they become bearish on things, but what happens is, gold has a series of rally, pause, rally, pause. These pauses, these rallies and pauses are called bull flags. If price goes up, it creates the flagpole, and then price flags sideways, and it creates just a pause. The market's recalibrating, rebuilding energy before it starts that next move. And that's where we've been really for the last several months for gold. It has this big move. And as you know, Elijah, one of my favorite tools is Fibonacci extensions, which Fibonacci theory, if you look up the number sequence, it's in everything in the universe. It is super powerful. And there's a golden sequence that I like to follow, which it's also called the golden ratio. If we just look at this last rally up to the high that we saw several months ago and the strength of the pullback, and we kind of carry that forward, we can get an idea where gold should rally to next. And it is showing about 3,700 is the next upside kind of surge for gold. And then they'll probably pause around there. The 618 extension is called the golden ratio. This is where price usually has a hiccup, or it reverses directions. It has some type of pause there. So if we do run up, that's the level that, a lot of people can lock in some partial profits, or just expect it to have a pause and a pullback. And if it does pause or pull back at that specific number, it usually means we're going to go up and hit the 100 level, the 100% measured move. And that is simply based on this rally, this straight up rally from the previous low, the flagpole. That is the same 100% distance to the next target. A bull flag is a halfway point. So once you've seen that bull flag form, you're like, okay, half of the move is done, but we still have the second half. And so that gives us to about 4,100 an ounce to the upside. And we're in this unique situation, very similar to 2007, just before the stock market, actually just as the stock market was making new all-time highs, just like we are right now, gold started to come to life, and gold had one more big push higher. And so there's a very interesting, chart setup, very similar to that time window. And we could see gold and silver have this big push to the upside over the next 2 or 3 months. Could be pretty explosive. And that would probably also mean the stock market is stalling out and going sideways or pulling back. Now, if we take a look at silver real quick, silver's down about 1% today. Gold's down about 1% as well. Silver has a very similar type of price action. It's more volatile. It's usually kind of more explosive. We have a rally up, and then it's flagged sideways. And we've had a rally up, it's flagging sideways. And with the same type of analysis, we can take the lows up to the high, and we can come back down to this recent low. And it gives us these levels to draw for silver, which is about $40.60, somewhere in there. So I would expect silver over the next, now this is the daily chart. So over the next month, over the next 20 bars, I'm expecting we're going to see silver run up to about 38.50, have some type of little pause or hiccup for a few days, and then probably have some blow off move for that second half up to about $40.60. And I think gold and silver will do these at the same time. Silver's come to life. It's played catch up with what gold has done. And I think both of them are a good play. I don't know which one is the better play. I think gold is more consistent. You're probably a better possibility of gold hitting those targets than silver is. But silver has got that percentage move. It moves faster. So I like both of these because they are a metal, or they're commodity, they're outside of the stock market. And if the stock market actually gets weak, we should actually see money want to move into physical metals. So, and we're in a unique situation where there's enough uncertainty and stuff going on that gold and silver are going to, I think, want to keep going higher anyway. So I like the precious metals space here. I thought the metals were going to top out several months ago, but instead they've formed this beautiful this bull flag pattern, and it's actually now pointing to higher pricing. So that's kind of my take on both of those from a technical standpoint.
The US dollar has recently exhibited significant weakness, falling below critical levels such as the 100 mark on the dollar index and entering a sustained downward trend. This decline reflects a broader shift in investor sentiment as the dollar becomes increasingly unloved within global financial markets. Historically, such periods of dollar depreciation have often coincided with robust rallies in alternative safe haven assets, notably gold and silver. A comparable dynamic was observed during the 2007 financial cycle, when gold surged to record highs amid escalating economic uncertainty while the dollar simultaneously weakened. Currently, gold is advancing toward new all-time highs as investors seek refuge amid concerns over inflated equity valuations and growing geopolitical and economic risks, while the dollar remains under considerable pressure. Market analyst Chris Vermeulen cautions that the prevailing extremes in market sentiment, characterized by widespread aversion to the dollar and elevated demand for gold, frequently precede significant market reversals. In the event of an economic downturn or increased financial stress, the dollar's established role as the world's primary reserve currency and safe haven asset could trigger a pronounced recovery. Under such circumstances, gold and equity markets, despite recent bullish momentum, may face resistance or corrective pressures. Investors are advised to exercise vigilance, recognizing the interdependence of the dollar, gold, and equity markets, as well as the potential for shifts in one asset to influence the others significantly. When these reversals occur, they present compelling trading opportunities, although success will depend on precise timing and alignment with emerging market trends. Let's get back to the interview.
The dollar, I mean, it's one of the most hated assets. It's funny, if you go back to the stock market top in 2007, we actually saw gold was hitting new all-time highs. Everyone loved gold. Is in a strong uptrend, just like it is now. It's undeniably, do not bet against gold. Lots of uncertainty going on. And the dollar had gone straight down. It was crushed. It was so hated. It was one of the most hated assets. You look at what's going on right now, we've got the stock market showing signs that it's overvalued. It feels like it could top significantly at any time. Everybody's moving into gold, or not everybody's moving into gold, but gold is moving higher, hitting all-time highs. And the dollar is in the dumps. It's in a downtrend. Everybody hates it. And, that's usually these are turning points, right? When everybody loves one thing and they hate the other and they're beat up and they're both at extremes, usually there's going to be some reversion to the mean, some type of reversal, whether it's a bounce in the dollar or a big rally. I'm not sure. But if we do go into some economic recession, something big, the dollar will probably come back to life. The U.S. Is a powerhouse. There's no doubt about it. And when things get ugly, the dollar tends to do pretty well. You don't want to bet against the U.S. So that's what I think. I think the dollar is going to have a strong bounce. I think the equities market and gold will eventually put in a top, but you definitely don't want to fight these trends. Wait for these reversals, because when these reversals happen, all these assets will actually be a very good trade. You just need to make sure you trade with the new direction when they happen. Sentiment has really shifted among investors. A few months ago, as everything was falling apart and the tariff talk was killing the stock market, everybody was looking for safety. Everybody's investment accounts were down sharply because, of course, everybody believes in always diversifying and holding on to stocks and bonds, and they just got beat up. We're in a phase now where the markets are going higher. And in a lot of cases, it's not because people really know what they're doing when it comes to trading or investing. It's just they're naturally told to invest and diversify. So they're in the markets. So when the market's going up, they know what they're doing because their account's going up. But the reality is people don't know what to do in the markets. They don't realize, very wealthy people are forward-looking, they're proactive, they front run and look for problems coming so they're ready for when they do happen. And if they don't happen, it doesn't matter. At least they have a game plan for if and when it does. And so right now people are seeing the markets at all-time highs. They don't see the risk. They think we're starting a new bull market. They think because their account's going up, they know what they're doing. And this is the reality. I've seen this happen. I've been doing this since 2001 with investors, with my investment newsletter, and it's the same cycle over and over again. Most people don't do anything until they're losing money, until the markets are crashing. There's red bar after red bar, and they realize they don't know what to do and they're scared. But we're in an environment right now. that if you're not scared right now and you're bullish, you should be scared. I mean, you're way better to be a nervous investor and have a game plan for if the brown stuff hits the fan and it never happens than it is to be somebody who's just riding this up blindly thinking you know what's happening, and then a piece of news or something comes out and your account just loses 20 or 50% over the next 4, 5, 6 months. So people just need to have a game plan, realize that you have to protect your capital. Buy and hold is not a way. Eventually, we're going to hit a big bear market, and it's going to cost you 5 or 10 years of no returns and severe stress and drawdowns, losses. So just people need to educate themselves on what to do if this market, and when it does. Eventually, we'll have one. So it's not a matter of if, it's just a matter of when. Have a game plan to move to safety, even cash. Cash is a position, especially when everything's falling. There's nothing better than earning 4% interest when everyone else's accounts are falling and everything else is dropping in value. So that's kind of what I like to share. So if we take a look at platinum, it has had a very explosive move, huge move recently. Now, I'm not a huge fan of this chart pattern now. I feel like it's a little overdone. What it has done is formed a running correction, meaning prices ran up for the bull flag, the flagpole pattern, but instead of flagging sideways or downward, it's actually flagging up. It's called a running correction. And a running correction means it's channeling higher, and it has these very sharp sell-offs and sharp rallies back and forth. And it's extra violent. And so what it's doing is it's correcting, it's shaking traders, sucking traders in, shaking them out back and forth. It's correcting as it's still running higher. And that's why it's called a running correction. And the problem with these is they're really violent when they end. It could end with typically usually ends to the downside eventually, but it could end up with an explosive rally to the upside. We could see, 1550, 1600 an ounce. It could be very explosive, but then it's probably going to end with a very sharp collapse. So you don't know if it's going to have the blow off top and sharp reversal, or if it is going to have like just a sharp reversal down and a big red bar where, in 1 month or a week, it gives back pretty much all of those gains. So I'm not a huge fan of it. There's big volume you can see here in the futures market. I think also with the ETF that allows people to trade platinum with an ETF, huge volume. So it's becoming that crowded trade. A lot of people have piled into it. So I like gold and silver over this. This one's had its move, and now it's showing signs of risk, volatility. Silver and gold are showing signs of stability in upward targets. I never put any weight into it. Into the gold and silver ratios. But yeah, it's funny because I remember when I was younger, I remember platinum platinum was worth more, but now it's not worth nearly as much. I don't trade off ratios. I trade off price action, and ratios can be out of whack for so many years, and it'll just put you on the wrong side of the trade or in the wrong commodity. Just follow price. Pick the one that has built a base and a launch pad, and it's got an uptrend and looks good versus, trying to get fancy with ratios. I don't believe in the ratio stuff. Eventually it'll play out because everything oscillates, it's a pendulum, but pendulums can be out of whack for decades in some cases, and it's your best to just follow price and stick with the best investment at any given time versus trying to play a ratio.
Looking beyond 2025, the silver market is widely viewed as entering the initial phase of a potentially extended bull cycle, reminiscent of the significant rally experienced between 2002 and 2012. This outlook is supported by a combination of strong underlying fundamentals, including persistent supply deficits and rising industrial demand. Experts anticipate that silver prices could rise substantially, possibly reaching triple-digit levels in the long term. Such a dramatic increase would likely be required to incentivize the development of lower-grade silver deposits, which are currently uneconomical to exploit. Although current prices above $35 per ounce provide profitability for existing mines, they remain insufficient to drive the substantial capital investments needed for new production capacity. The market dynamics are further complicated by the lengthy permitting and development processes, which often span nearly 2 decades, limiting the ability of new supply to respond quickly to escalating demand. This demand is expected to accelerate significantly, driven by the growth in electrification, renewable energy technologies, and the expanding use in consumer electronics. How do you anticipate gold and silver prices will perform shortly, considering current market dynamics? Share your thoughts in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.